Welcome to the Aramir Roundtable. Today is December 19th, 2018. We have our guest HP. We've been in the same communities for a long time, so it's nice to finally get to have a presentation with you in the Aramir community. So welcome, HP.
Thanks.
Before we get too far, just a normal disclosure that Aramir Corporation is not a broker-dealer or an investment advisor. This is for educational purposes only. Options do involve risks and are not suitable for all investors. Past performance is not indicative of future results. And if you want to read the whole disclosure, go ahead and pause the video or go to the bottom of our web pages. So let me just pause the recording and we'll switch over to you. Okay, and we're back with HP screen. So take it away.
Okay, I'm sharing everybody the way how I time the market through market breadth. So here's an overview. It's basically the agenda that I'm going to go through. The first is that I'm going to share with you how my personal journey is in this kind of method. And we'll go through certain variable definition of market breadth. And we'll go through general ideas of using market breadth. And I'll show you the hits and misses when I use the market breadth. And I'll show everyone how I trade with the use of market breadth. What's going forward for me. And we'll just go over today's market breadth very quickly. So, in my opinion, market breadth is the most reliable indicator in understanding the market internals. So, because every day we are faced with that decision: is the market going up, is the market going down, or is the market just staying flat? So, by studying the market breadth, it's actually giving us a very clear clue where the market might possibly go to. So, in my opinion, it's the most reliable indicator. So, early in late 2014, I got some basic ideas about market breadth. So what I got exposed to is the following three indicators that everyone can find in the internet. The first one is BPNYA, which is called Bullish percentage at New York Stock Exchange. The second one is BP Compact. It's also a bullish percentage at the NASDAQ. And BPSPX is the bullish percentage at S&P 500. These are just calculated. These are numbers from between 0% to 100%. So it gives you a very rough idea how many stocks in the stock exchanges are showing bullish trend. So as time goes by, I keep observing all these market breadth indicators and adding my own indicators, and I observe how they morph between the changes of the market direction. So by simply following the direction of market breadth, I have been able to avoid several big drawdowns because market breadth actually start to deteriorate before the market start the change of going downwards. So by just following the market breadth, I was able to just many drawdowns. Here's an example. In this screen, you see two pictures. On the left-hand side is what we call the BPNYA. It's a 90 bullish percentage index. You can see the number here. In this picture, it's between 53% to 69%. And on the picture, I have the 10 days moving average, which is a blue line. And on the right-hand side, it's a VXX. Because I was shorting volatility all the time. So both these two pictures are between early 2015 to July 2015, okay? So you can see on the left-hand side, I have three circles. Those circles are when the market breadth, one of the market breadths, BPNYA, starts faltering and actually breaks the 10-day moving average. So on the right-hand side, you can see also three circles. That is how the VXX behaves. So I vividly remember that when I see the BPNY is faltering, I start reducing my size. And the moment when it breaks down the 10-day moving average, or when the MACD histogram is going down to single digit, I just stay away from the market. So by simply doing that, I was able to avoid many drawdowns as you see here, because as I was shorting VXX, when there's a spike, it's just so painful, especially in 2015 July. You see that there's a 25% spike, and I was able to just get out before that thing happened. There's another comparison chart. I'm also using BPNYA, and this is in 2016, end of 2015 and early 2016. On the left-hand side is the BPNYA. On the right-hand side is just the SPY. Okay, there's a circle here on the BPNY. You can see that the breadth is actually flickering, while the SPY on the right-hand side is trying to make new highs. And actually, after the breadth start falling, you see there's a big divergence, which is the market breadth is going down, but the index itself is still hanging high. And eventually, the index has a big drop. And later on in 2016 February, we can see the breadth is actually improving, while the index is testing the previous lows. So there's another divergence showing here, which is giving me a signal that the bullish, the market uptrend is very close, is very near. So later on, the market just keeps running up. So this is just a very simple example showing how the breadth actually can be, just one indicator of the breadth can be used to give me a guide how the market might be going to. So by simply following certain kind of breadth indicators, I was able to avoid several drawdowns in 2015. And as I show you, I avoided the December 2015 market correction. And I was able to participate in the February 2016 rally and the Trump rally in November 2016. That was also a classic example how the breadth actually flipped to positive. And also in 2017, I was able to avoid several drawdowns. And the most important event in the past, in this year, is that I was able to avoid February correction and the October correction. So I'm very convinced that the breadth is a very reliable indicator in understanding where the market might be going to. But there are cons in doing this. First of all, the breadth cannot predict geopolitical shocks. I think this is given. I don't think anything can have any predictive power in forecasting geopolitical shocks. For example, in September 2016, when the North Korea launches missiles, at that time, that nobody sees that happen. Also, in August 2018, when Trump wants to punish, there was a big drop in the market. There's no any indicator in the breadth. And in November 2018, when Trump said, I am a tariff man, at that moment, the market was just spooked. But the breadth before that is also very positive. And again, in December this year, when there's later on that we find out there's no deal between the US and the China on the trade. So that's also a geopolitical shock. So this bear in mind that market breadth will never be able to tell us this. So let's go back to the definition of market breadth. So market breadth is just a technique used in technical analysis that we are trying to gauge the direction of the overall market by analyzing the number of companies advancing relative to the number declining. So basically, you have a number going. You have certain number of companies going up. You have certain number of companies going down, and of course, there's a certain number of company that does not move. So basically, you look for the numbers, and there are also different variations. For example, people looking for the volumes of going down or volume of going up, and make a calculation of it. The calculation can be pure number, or it can be percentage. So there are just many ways of identifying and defining market breadth. So what we understand is that what we actually use is that an uptrending market is only healthy when market breadth keeps improving. That means that if the breadth keeps improving, that means that there are a lot of participation in the overall market. So an uptrend market is only healthy when there's participation. On the other hand, an uptrending market will be in jeopardy if the market breadth starts to falter or to weaken, because the participation is no longer there. Even though the market index is in an uptrend, the uptrend can be achieved by some big companies like Apple or Google, but other small companies or other companies, many other companies are just falling apart. So also, a downtrending market would mostly keep dropping if market breadth keeps worsening. Like now, we have the we are now in a downtrend situation, and the market breadth is just keep dropping. So chances are the drop will continue. And on the other hand, a downtrend market may have found the bottom when market breadth starts improving. So here's a very quick table. The column here, we have market in uptrend and market in downtrend. On the first column, we have breadth, whether breadth is bullish or whether breadth is bearish. So when breadth is bullish and market is in uptrend, so we know that uptrend is confirmed. But on the other hand, when breadth is bearish, the market is still in uptrend, there might be possible corrections. So the similar rules will apply. When market is in downtrend, the breadth is bullish, the market bottom might be near. When market is downtrend, the breadth is bearish, so we know that downtrend is confirmed. So how to use the market breadth? There are so many breadth indicators, right? As I showed you, there's something called PPNYA. There's advanced decline line. There's McClellan indicator. There are new highs, new lows. Which one should we use? And how should I use that? So what I found is that you should just create a basket of breadth indicators, okay? And identify their behaviors, because some breadth indicators can be lagging. Some kind of indicator can flip from a regular indicator to a contrarian indicator. So we have to identify their behaviors and collect their signals. Just ask them what they tell me today, and let all these basket of indicators vote. So by doing that, you can get a breadth strength signal between 0% to 100%, with 100% to be very bullish and 0% to be very bearish. So every day, I just come in and look at my basket of breadth indicators, and I calculate how much breadth strength they give me. So I get that raw number. But that raw number is not the one that I'm going to use, because I have to consider current market situation. So I add filters to filter the signals down based on midterm prospect. For example, right now, if you have a weekly chart of a certain breadth indicators all going downward. So by having that information, I will say, okay, even if my breadth signal is saying 100%, I will reduce it to maybe only 50% or maybe only 25%. And in addition, I will also look at some volatility landscapes to determine what kind of reduction I need to add to the breadth indicator. So by adding filters to throttle down the breadth signal, I can reduce drawdown during market uncertainty. Okay. Here I'm going to show you the hit and misses. The first one is February 2018. This is a textbook. Every single breadth indicator falls off before the real drop happens. So one of the indicator, BP9YA I use, you can see that it's just start not improving that much. And you see there's a downward expansion right at around January 30th, and it breaks down the 10-day moving average. So at that day, this indicator is say, okay, no, the market is not going good. One more indicator on February 2018 is the McClellan Formation Index. You can see that it falls off like also January 30. So I look at my basket of indicators. Basically, everybody is saying, okay, market is in trouble. So here's what it happens. The orange line here is the SPY. And the blue line is my personal breadth strength indicator. You can see that starting like in January, like 25th, this thing just drops quickly and it never comes back. And it's at 0%. That means very bullish, very bearish. Like February 1st. But at the same time, SPY was still up very high. So I was able to dodge this drop just by following my breadth indicators. And here's another example, which is October 2018, which just happened recently. So it's the same thing. Every single breadth indicator falls off before the real drop happens. So you can see that the first time it hits, you can see that BPNY actually is not improving anymore, even though the market is trying to make new highs, and it actually drops early in September and try to climb back up, but it fails again, and it just breaks down on October 3rd. The same thing on one of my indicator, which is a T2123. It's a cumulative 4-week new high, new low. It just fall off like September 6th. So my other indicators are just showing the same thing, that just things just falling apart from mid-September and early October. So here's the indicator, what the indicator says. You can see the breadth indicator reaches its high around mid-September, then quickly deteriorated to almost 0%. And we can see SPY actually drops later. So again, I just follow my breadth indicators, and I was able to avoid the drop of October 2018. So just by avoiding these two drops is just, I think, oh, it's like heaven. All right, and here I'm going to show you some misses. Because breadth indicators, they do give us some false alarms. However, it is very minor. For example, this is late July 2018. The breadth went down to 0%, but the SPY just keeps going up. So the worst is that you didn't participate in this kind of small rallies, which is okay. Again, there's another breadth false alarm late August. Because what we miss is just a short period of running up. But we, because breadth actually is very, very tiny, so it will if it is wrong, it will quickly reverse back. Again, breadth cannot predict geopolitical shocks. This is something I have to say again and again, because this year we just have too many geopolitical shocks, and that makes things more iffy. So In addition, if market is in downtrend and volatile, just as what we have now, breast actually create false entries. So this will create unnecessary whipsaws. That's why I say always throttle down the breast signal during market downtrend, and always throttle down the breast strength when breast health is declining. Let's just go back to this example here. For example, this is 2015. We can see that between December 2015 and early 2016, BPNYA itself is going down. But you see, there's some time that the breast actually is moving above the 10-day moving average. So does this one give me a breast signal? Yes, it gives me a positive signal, but I will always throttle it down because the breast trend is going downward. So a very simple idea is just look at the weekly trend chart of the breast. So if you have that, you can just, if the weekly trend chart is, if the weekly chart of certain breast is going down, so you at that moment you always need to like reduce the actual breast data. In addition, I also consult the volatility landscape. For example, if we are in rotation, I say, okay, I'm not going to the market with a full breast signal. I will just throttle it down. So basically, I have certain filters that can, during market trend, I will just use them and to reduce the breast signal and to decide what kind of exposure I will get myself into. So how do I actually use the market breast to trade? So every day in the morning, I will come in and look at my breast indicators, and I will record the breast strength. So again, the number is between 0% to 100%. So I do it between 7:50 and 8:30 EST. After I get the number, I decide how much to throttle it down based on the market condition. For example, if I decide to throttle it down to by 75%, and if my breast indicator is 100%, and I say the market can go bad, I will just reduce it down to 25%. So that's the final breast strength I have decided. Say, okay, today I'm going to use 25% as my breast strength. So if the breast strength is greater than 0%, I will buy a basket of 3x ETFs for per breast strength. For example, if breast strength is 10, I will use 10% of the portfolio of designed portfolio to buy the 3x ETFs. The ETFs I buy is TQQQ, SPXL, TNA, and the Dow Jones. What's that? UDOW. On the other hand, if breast strength is 0% and we're in backwardation, I will just put a long VXX with 25% of my disease portfolio. So by following that in the simple algorithm here, following breast and decide what just buy the 3x index and long VXX is back. This is a simulated result for this year. You can see that the return between January 1st to December 14 is 23% with drawdown of 1%. So my personal result is less successful, okay, because there are some mistakes that I made. First of all, I did not long VXX when breast equals 0 and backwardation because I was like iffy when things was in volatile state. I didn't actually long VXX. So in addition, For this year, I did not use the 3x ETFs. Because for the past few years, I basically just short VXX following breadth, and I had very good success. And I carried that strategy to 2018, and I didn't realize that I can actually buy 3x ETFs. And one big mistake is that I did not throttle down the breadth as I should during market correction because of greed. Because I was greedy, I say, okay, breadth is coming up. Why not let me just get more exposure to it? So this is unnecessary loss, especially in this month. In addition, this year is basically not the year for shorting VXX because we see VXX is up almost 50% year to date. So my personal result is less successful. So how does that work? You can see that, okay, I have about 17% drawdown, which just happened this month. And my return is in the negative lane because basically shorting volatility does not work. And I didn't participate in long volatility in February or October. So going forward, I will long 3x ETFs with 30% of breadth strength, and I will short VXS7 with 70% of breadth strength. This is just me. I decide this works better for me. But if you can decide whether you want to just do the 3x ETF or you can just short the volatility. And I will just go long VXS when breadth is 0% and win backwardation. Because when the breadth is in 0%, that means that there's basically no participation, right? And if it is in backwardation, there's a good chance that VXX will just carry us up. And I'll throttle down the breadth strength as I should, because I think discipline is still very important. So if I do all these things, this is the result that could happen. So my return will be 16% for the year, and drawdown is about 10%, which I think I will be happy with. So let's say, what are the breadths today? So let's just do a quick check of the breadth. Let me here show. Can you see my screen?
Yes, I do.
Okay, so here's the BPNY. This is one of my favorite breadth indicator, okay? So we can see the market today is running up, but BPNY itself is not responding. So it gives me a clear indicator that, okay, it is very likely to be a dead cat bounce, right? And one other indicator, let me share with you. Hold on, one sec. Share. New share. Can you see this? T2123 here.
I see the BPNYA still.
Still?
Oh, there we go. Now I see it.
Okay. So you can see T2123 is a cumulative 4-week new high, new low. As we see that it's in a downtrend and we have a market rally today, but the number itself is negative 105. That means there are more than 100 stocks that's moving, making new lows in the 4-week cumulative base. So what does it tell me? It tells me that, okay, the market is not doing well. So I'm not going to go back into the market until the breadth indicators are actually flipping up to positive. Okay, so I think that's all I have. And this is a way that I use market breadth to determine how I can actually trade it. So that's it.
Okay, now I know you had said you were interested in a trade alert service, so I guess people would probably want to know a little bit more about how you actually trade. So you said you rebalance your portfolio every day.
Yes, I do, because every day, let me share with you this.
And Dan Harvey's on too. I'll unmute Dan because I know Dan's been working with you too. Hey, Dan.
Good morning, Tom. Good morning.
Hey, Dan. Okay, here's the thing. I'm sharing with you this. Can you see a table here?
I see a PowerPoint going forward slide.
Let me take a few seconds. You see a little sheet here?
I still see the same slide. How about you, Dan?
I'm still seeing the going forward.
Okay, let me share this.
Okay, now I see a spreadsheet, trading signals, midterm vol, and T2.
Yeah. Okay, you can see here. Basically,
Okay.
every day I come in here, I record my breast strength here. And I will apply certain filters based on, like, this is filter 1 and filter 2, and other filters as well. So this is how I trade. I just, every day I come in and I look at breast strengths, and I look at the other filters that might be applicable to throttle it down. So basically that's a signal that I use on a daily basis.
Okay, and then Andrew had a question. How do you throttle your cumulative breadth down? Do you have a formula for that?
I do have my formula, but it's pretty proprietary. I'm looking at certain breadth indicators, and I'm looking at volatility landscapes, and I'm also looking at the overall market condition.
And then I think you told me that you're using, you would recommend like a $50,000 or $100,000 account for, because you had to buy all those ETFs. There's like 3 of them.
I would say $100,000 account would be better, because every day I need to rebalance it based on the breadth. And if that will always involve the commission, right? If the account is small, I don't recommend doing this.
And then,
for example, you can
go ahead.
For example, there's December 3rd. We have a breadth strength is 100%. That was the day when Trump was saying, okay, there is a deal, right?
Right.
But in reality, if you want to step in, that would be a mistake, because there are other indicators that say, okay, you should not go in. Like the filters say, okay, you should not go in. And some other breadth signals say, okay, you should not go in. So you should always throttle it down when the market is in down.
So
Okay.
I see the breadth strength column. How do you use that with your other parameters to decide, what am I going to do today?
I basically have an algorithm. I actually code it into programming language.
Okay.
So come into here and look at all my all other environment parameters, and I reduce this down.
So even though it might be 100% on the breadth indicator, your algorithm might say still don't do anything.
Yes.
So Dan, I know you've been looking at this for a little while too. Just curious what your thoughts were.
Yeah, I look at I met with AHA, I guess about a month ago. We had some coffee, and he shared this with me, and I was very impressed with his algorithm, which, obviously he's not going to disclose all the details of the algorithm, understandably. And I have been also looking at this myself since that time, and I think it gives a pretty accurate interpretation of the overall market, the tone, and reduces that information to a signal. His breadth, strength signal, and it's so that then introduces a level of objectivity to the decision making process. If the breadth strength signal is very low, I know that HP stays out of the market, and that's very frequently a good thing to do. And for those that might choose not to completely stay out of the market, you'd at least have some indication that you may want to reduce your size, or if you have any profits, take some profits off. Conversely, when the signal is very strong, like we saw, that's a time to maybe belly up to the bar a bit and get into the market. And so I think this gives some very useful information, and I think that he has distilled a variety of indicators, and I have seen all his indicators, and I've also seen the way that the algorithm is calculated, which of course is not going to be shared. And then I have seen his back tests. You're seeing an example there on the screen. And I think it's some very, very useful information.
Speaking of back test, we see like this the current year. Do you have more data you can show for previous years?
I only start documenting all my breast information starting September 2017. So anything before that, I cannot do that because there's no data recorded. But as we know, 2017 is a very good year for just anything. So that doesn't make us very, it doesn't give me more confidence rather than just using the 2018, because 2018 actually is a very tough year, especially for me when I was just shorting volatility. It just basically doesn't work. But I was still able to manage to escape the two big drawdowns between February and October, which I think it's a blessing already.
Yeah, I think a lot of people would be happy if they'd followed your breadth indicators for those two down moves.
Yeah, because I was saying when I look at like in late January, as the number said, "Oh, what's going on? The market trouble." So I was just pulled out of the market very early. Like by February 1st, I was in all cash.
So I think I was going to say, I think the other thing to point out that AHA likes to use the 3x type of ETFs when the market is really bullish, and maybe buy VXX when it looks like it's going to take a bearish turn. But I would point out to other people that you don't necessarily have to do it that way if you don't like the 3x ETFs. For example, if if the signal is bearish, you might just choose to buy an in the money SPY put going out a month or so, and to minimize the time decay of the put. And if it's in the money, the time decay will be less anyway. And then you'd be able to capitalize on a downward move of the market. And conversely, if you want to go bullish, if you're having a bullish signal, then you can, do whatever you like. You buy stocks or buy spider or sell credits, sell put credit spreads. The main information here that I think that AHA is giving us is a way to determine on an objective basis the overall market tone and strength or lack thereof. And then what the individual trader does with that information will be according to his or her style. Would you agree with that, HP? Does that make sense?
Yes, I fully agree with that, because it gives the breadth data give me a very, very clear, just like you said, it's a very clear tone where what the market internals are telling me and what are the possible directions that the market is going to. So with breadth in mind, I feel very, very confident about my action, knowing that it can still give false alarm or false entries. But again, those losses will be small compared to the big ones that it's actually predicting.
Well, that's right. And I would say that since HP is a friend of mine, he has graciously shared his signals with me. And I've been following them for the month or so since we chatted over coffee, and he showed me this system. And I have found them to be very reliable. And I have obviously cut back on quite a bit of my personal trading. Obviously, I still have to do the road trip trades, but for my own private trading, I've cut back quite a bit because the signals have all been very bearish, and they have proven to be true. And I think that his backtest results further exemplify the benefits of monitoring the market tone in this manner.
We did have a question from Ivan about he sees that you're using TC2000, and he's just curious how you subscribe and what service level is the most price effective.
Yeah, sure. Well, I've used TC2000 off and on, mainly on, for more than 10 years, more like maybe 15 years. And it's, you get a lot of bang for the buck on that. And they do have several pricing levels. I do the gold level, which I think gives me all the information I need. I don't really need the real time. So quotes are 20-minute delayed, but the charts are good. They're accurate. The software runs seamlessly, never a problem. So yes, that is correct.
And I found the URL for you and put it in the chat.
Yeah, and if you sign up for a year, might get a little break, although not much. Well, actually, I think you do. I think it's $2.99 for 12 months, so you get 2 months free, as I recall. Don't quote me on that.
Yeah, a lot of places do that. Pay 10x from the monthly and get a year.
Yeah, but I look at this. I look at indicators, most of which are the ones that HP uses. I look at them just about every day, and I look at HP's signal, and so far it has been spot on.
Yeah, because as I said, every day I come into the market, I'm asking myself, Is the market going up, going down, or is just going sideways? Just by looking at the index itself or looking at the price action itself, sometimes it's so vague. But after I look at the breadth, it just it just speaks loud and what the market might be doing.
Right, and I mean, there are several ways, to think about how this signal can be used. I mean, again, if the signal is really sharply bearish, it doesn't mean that you simply completely step away from your computer and never trade anything. It simply means you may want to, for example, not make any long-term type of trades that you're going long, over the next 2 or 3 months, because that is probably not going to work. That doesn't mean you can't do maybe some weekly trades,
yes,
or some very, very short-term trades, whatever vehicle or product you choose to use. But that way, you're not really incurring a lot of risk just in case the signal changes and it becomes, we'll say, bullish again, but you can still capitalize on the value of the signal being bearish. So, for example, you can, as I said, buy in the money spider, you can sell call credit spreads, things like that, if you're getting a bearish signal. And of course, if you want to go along the VXX, you can do that. My personal experience, and this is just me, my personal experience with the VXX is not very good. I never seem to get in at the right time and the right price. But that's just me.
Yeah, I think I believe long VXX is very, very tricky. That's why I use a very small amount of my portfolio to do it.
Yeah, yeah. And well, that's the other thing that that the HP didn't have time to elaborate in detail, but he has a very nice allocation of his portfolio, according to the signal. And when the signal is strongly bullish, he tends to really belly up to the bar, as I said, and kind of go all in, right, HP?
Yes.
And as far as the stockcharts.com question, actually, you can get the BPNYA for free. That's a free indicator on stock charts.
Yes, that's one of the very accurate bullish indicator. But there are cons of that indicator as well, because it's a percentage based. So sometimes it will just saturate, or it just don't give me some. It will become saturated, so it's not actually responding to what the market itself is doing. Sometimes that's why I said don't rely on any single indicator to have a basket of it.
Well, right, and you have a very nice basket of indicators.
Yeah.
And like you were saying, you don't want to look at just one and make all your decisions on simply one indicator. But generally, as I think you pointed out, when indicators start to go bad, the majority of them go bad. When they start to look good, the majority of them look good.
Yes.
So this gives you added confidence on market tone.
I think it's clearly shown here. Like here, right? It's in February 2018. I say, okay, all the things just start falling off very quickly.
The advantage of what HP has done, though, is to reduce the indicators and and everything that he looks at, including all his filters, you know, he reduces that to a number, which then gives you a very high degree of objectivity. When the number is really low, you don't want to be in the market. When the number is, you know, really high, you want to be bullish.
Yeah. For example, right now, my indicator says it's 0%. Nothing works.
Right, yeah.
I'm long. I have some small position on VXS long, and I'm just going to ride it until things just go away.
Yeah, I think your indicator has been 0 the last several days, hasn't it, as I recall?
Yeah.
So, you know, so again, as you know, as he pointed out, you know, his signal is 0, but yet the market is up today. But that doesn't mean that you want to be going long today.
Yes, because if there's no participation, there's basically, I don't think it's healthy for the market. But granted, the market can rally up very sharp and big, but if price signal is still saying 0 or very low in terms of percentage, I would say no, I'm not going to participate. I'm not going to risk my money. It just doesn't make sense to like be a bold pilot at this kind of environment.
Well, sometimes the best trade is no trade.
Yeah.
Cash is a position.
Yes, exactly.
So I'm kind of thinking that there's two possible versions of a trade alert service where people would maybe want to do their own trades but are still interested in the number that you come up with every day, and others that want to see your rebalanced portfolio every day. But I think what I should do is probably send out a survey and see what people are really interested in. My guess is a lot of people want to hear that one number because, you know, you can apply that to almost any equity-based trade.
Okay.
Any other questions? I really like the concept of having a consensus of indicators. That are really clever thinking. So nicely done.
Thank you.
I guess Ivan had a question about NYHL. Is that one of the indicators that you use?
I look at that, but I don't actually put that into my basket because I have other things similar to that. New high, new low.
And I guess we've had a request for a copy of the slides. So if I don't know if I have a copy of them. I know you sent me yeah, just send me a copy of these, and then I'll post them with the recording.
Okay.
And you were going to say something, Dan?
Well, I was just going to say that you know, regarding Ivan, a question is not so much a single indicator. You know, again, you don't want to use a single indicator to try to make all your predictions. And the way that HP has done it with his basket of carefully chosen indicators, some of which are TC2000 and some are not, and the other filters that he uses, that's what is then reduced in his algorithm to the number. So simply trying to look at the BPNYA or the NY, the NYSE, you know, high low, that's not going to, that won't do it, you know, in and of themselves. You need the basket, and you need a way to process that information to you know, gain some objectivity for your decision making. And I think that's what he's done. He did a great job on the presentation, and like I said, I was fortunate enough to see his algorithm and see how it works, and I was very impressed by it, and that's the reason I mentioned it to Tom.
And I really like what I see. I like the idea of distilling it all down to an actionable number. And I think that's very useful for many people.
Yeah, I think if if you were able to get a service going, I think that it might be useful to get some additional information in terms of what you might do with the signal in terms of buying stock, buying certain ETFs, maybe have some additional information about what you could do, because I think there's going to be a lot of people that are not going to want to buy the 3X type of ETFs.
Yeah,
I mean,
yeah.
they work when they work, but of course, because of the way that they are priced, every day, I mean, what I found with those, they're good when they work. They'll make a lot of money very quickly, but when they're not working, I've had the situation where the ETF is actually up a little bit, we'll say, but I'm actually down money, and this is because of the way that they are repriced, every day.
Mm.
So a lot of people don't like those, and if you use them the way that HP does, that would be fine. But you really do have to rebalance everything every day if you're going to use something like that, because their pricing will change actually quite a bit. Maybe I'm just old-fashioned, but I like the regular 1X stuff.
Yeah, the other way to do it is to buy the IBD 50 ETF. That there's a new ETF that tracks the IBD 50.
Yeah, and that actually also gives a good signal too.
Yeah, the ticker is FFTY.
Yeah.
So
And I have that added to my list of things that I look at in addition to HP's signal.
yeah.
Okay, great. Well, again, it was wonderful to see the market breadth indicators and what you've done with it. It's really a nice piece of work, and I'm sure many people will be interested in it.
Thank you.
So why don't we wrap it up? And if you send me the slides, I'll process the recording and get this out to everybody, and then they can start working on them or reviewing them. And then we can talk about what we should say in a survey to find out exactly what people are interested in.
Mm-hmm.
Thanks a lot, HP.
Yeah, thank
Okay,
you.
thank you. Thank you very much.
Bye-bye.
Bye.